Bitcoin finally had that push to the upside yesterday on the back of the Federal Reserve's US monetary policy update, the 0.5 interest rate cut, the 50 basis points. And well, that's had a bit of an effect on the market. In today's video, we're going to be taking a look at the technical analysis on BTC, where I'll be sharing my thoughts and opinions as to where I think the price action is heading next. As I get into today's video, smash that like button if you're new to the channel, subscribe, and let's take a look at what's going on with Bitcoin. So here we have BTC paired up with USDT. We're on the 1 hour Binance chart here. And as you guys know from a few days ago, we had penciled out this area between 61.5 and 62,745. This was an area that we were hoping to kind of reach before the US pivot, essentially. However, or the Fed pivot, I should say. However, obviously, we did see a bit of a slippage to the downside. So we thought that maybe we'd just fallen short here on Tuesday. We were looking for support on the 50 EMAs, 50 SMAs in that range of 59,350 to 59,800. Yesterday, we saw some more volatility. We did see a double top situation here, then obviously a crash down to the 50 SMA and then a rally back up. This is kind of what I was talking about yesterday when we were talking about the experiencing extreme volatility. Specifically in the market where we see pumps and dumps and a lot going on as the market tries to figure out which way things are going to go. And for the most part, the market is still very much undecided. It can't decide whether or not everything is really super bullish or, actually things are about to kind of see some slippage to the downside. Traders are on the fence with this one, and that can be seen inside some of the trading data. So, when you take a look at the long positions, the short positions, the options and all that kind of stuff, the market is very undecided. So although there's been a little bit of positivity here, we obviously hit into the area of resistance. The consolidating right now is actually pretty much a positive, when we might still see a little bit more of a push to the higher ranges. And there is that idea that maybe we can push up to that kind of 65. We're talking about this yesterday. $65,000 to $66,000 before we kind of get into the bigger moves, which are going to be, unfortunately, bearish ones in my opinion. So for the most part, we've kind of done things as expected here, but I don't think we're done just yet. If we take a look at this, and this is kind of what we were talking about in a few kind of days ago, we can see here that there is still this idea of this move a little bit higher, 63 to 64. If we do push up a little bit higher into the 64 to 65s, it would have to be a 5-wave structure to do it. So again, very interesting things going on from all of those kind of points of view. My kind of point here is that I don't think we're finished just yet. I'm looking to see a little bit of further push to the upside. Probably today, we'll be looking for kind of 62.8, maybe 63.2 in that little range, then a bit of a correction. Now, if we just move down from here, it's not the end of the world. We've kind of come up into these area of resistance, but we can see how the market, it really just can't quite figure out what is going on. Now, at the point of recording today's video, we are recording this at 5 a.m. UTC, which is about 6 a.m. UK time. So the market at the moment obviously is still, undecided. It's quite early days. As we start to see London open, that's going to be interesting. See how those kind of traders look at the market, and we'll obviously see a lot more interest over in the US when that opens in the afternoon as well. So for now, expect some volatility. If I were to be trading it, how would I be trading it? Well, we have that ability for a little bit of a push to the upside. So there's the idea of maybe going long here, stop loss lower than that previous swing low, just to kind of protect yourself a little bit. And we'll target out some of those higher ranges. 1.5 on the risk reward ratio would be my kind of appetite. So hypothetically, entry around 62,079. Stop loss at that idea of 61,527 and take profit at 62,905. 1.5 risk reward ratio would be my approach to this. Okay, so if I'll be trading, that would be the approach to it. Talking about trading, are you ready for an exciting opportunity that you definitely don't want to miss out on? Imagine this, signing up to a top-tier cryptocurrency exchange and getting the chance to get your hands on a brand new iPhone 16. Yes, you heard that right. BingX is giving you that chance. BingX, one of the leading cryptocurrency exchanges out there, is running an incredible promotion right now. For all you new users just signing up and trading, you'll be entered to get a chance to get your hands on an iPhone 16. I mean, who wouldn't want the latest iPhone in their hands, right? But wait, that's not all. There's Also, a fantastic offer of up to 90 USDT for completing simple tasks on their platform. So not only could you walk away with an iPhone, but you could also stack up some crypto for free just by using their platform. That's a win-win situation. Here's how easy it is to get started. Sign up on BingX using my special referral link in the description down below. Complete some simple tasks to unlock up to 90 USDT. Trade on BingX futures and cross your fingers on that iPhone 16. And while you wait, start exploring some of the amazing features of BingX. Don't wait around. This promotion is only for a limited time. Click the link in the description, sign up on BingX, complete those tasks, and maybe you'll be the lucky one walking away with an iPhone 16 and some extra USDT in your wallet. Who's in? Take action now and get yourself into the BingX rewards. Okay, so with everything else going on the daily time frame here, very, very interesting stuff, some trading opportunities here, but we will be looking for the bigger breaks, I think, in the market to really take advantage of bigger, larger moves with more percentage gains in the market. So if we take a look at momentum here on the 1 hour time frame, you can see it's overbought on the 1 hour and 4 hour. So again, it's not being overly too supportive, but we can, of course, stay up here for a little bit longer. So I do suspect that's kind of what we're looking for. Bearish shift at the moment, so it'll be interesting to see whether or not we just completely break down or whether we can get into those long positions. So that's going to be a very interesting time for Bitcoin. Turn the stochastics off and bring on the relative strength index. You can see it's hovering around these higher ranges on the hourly chart. So again, momentum might start to shift down a bit as well. I think that's kind of a bit of a macro picture going on there. Yesterday, we obviously saw volumes coming in on the back of the news, but volumes right now are dropping right the way back down as the market just doesn't quite know how to react at the moment. And so again, we look for some positivity if there is any. Otherwise, I think we are going to be expecting what we've been talking about for a while, essentially, which are the bigger bearish moves ahead of what is going to be one of the biggest bull markets in crypto history. Let's roll this up into a daily time frame. On the daily time frame, you can see that we've come up into the area of resistance. Okay, so that 61,685 to 62,745. That's the previous area of resistance that we broke through. We kind of had a fake out here where we did hit under $65,000, which is another upper area of resistance. Now, on the daily time frame, we are, very clearly aware that we are in lower highs and lower lows. Right? If we zoom out of this, you can really see that there. That hasn't changed. Anything higher than $65,000 will give a bit of a hope that maybe we are done with the corrections, but I would also be looking at that as a bit of a fake out. We truly want to see a move above 70,079 for a bigger kind of idea that we are in fact breaking out of the lower highs, lower lows situation. As I've been talking about for a while though, I do suspect actually $40,000 to $44,000 is on the horizon. We are heavily overbought here on the daily time frame. Now, that's not an indication that there's going to be a big move to the downside or a small move to the downside. It doesn't tell us that. It does tell us, though, that buying is exhausted and we should start thinking about sellers really kind of taking control of the market. It's a momentum indicator. It doesn't show you the strength of a movement. So, I'm saying 40,000 to 44,000 for different reasons outside the stochastic RSI. But you can see here that it is overbought, and this is going to be an indication that the market is getting ready for cooling off, not for continuation of funding moves to the upside. Now, the Federal Reserve US policy, the interest rate cut that happened yesterday, is insanely bullish. And I totally agree with that kind of premise. It is a very bullish sign that the lowering of interest rates, that basically signals to larger institutional investors that now might be a time to start thinking about riskier assets. So when interest rates are climbing higher, typically it means that you don't want to be invested in high risk assets, such as cryptocurrency. When interest rates are low, it's actually more beneficial to be investing in high risk assets. And that's kind of the importance of those interest rates. But you can't look at interest rates solely on their own either. There are a few other metrics that you have to pay attention to, M2 money supply being one, whether or not there's a lot of liquidity in the market. Another metric for that is going to be your unemployment rates. And we know already that actually the market's very much illiquid. And that's why we see the Federal Reserve pivot. The pivot happens when the market is at its most illiquid. Okay, it means that they've kind of done their job, right? And doing and raising the interest rates essentially is it's designed to suck out liquidity. Liquidity is already at its lowest point in the market. And as such, you tend to find that people become so desperate that they sell off their assets at whatever the prices may be. And so it kind of fulfills a prophecy of dropping the price action in the stock market and in the crypto market and so forth. So $40,000 to $44,000 isn't just a random number either. It is a part of a three-wave correction into this low in the previous area of consolidation. This is my kind of go-to kind of solution, I think, for what I think is going to happen over the next few weeks or so. So although we've had a bit of a relief rally into everything that's going on, I suspect we are still looking for these moves to the downside towards that kind of $40,000 to $44,000 before we get into the bigger bullish movements to the upside, which are of course targeting out at least $100,000 in my opinion, with the potential to move up more towards $130,000 to $135,000. But of course, that could change. We'll have to see how this move develops in time. But 2025 is looking to shape up to be a very, very good year for Bitcoin, for crypto. And it's going to be a phenomenal bull market in my humble opinion. Now is not the time to be kind of scared, but kind of preparing yourselves for what comes in the kind of coming weeks, which is a huge buying opportunity for Bitcoin, but also for the wider crypto market as a whole. But guys, you can let me know what your thoughts are on all of this in the comments down below. Do you agree? Do you disagree? Where do you sit with the price action of BTC? Let me know in the comments below, or join us in our free Discord server linked in the description down below. And if you found this video useful and informative, smash that like button so you're new, subscribe, and check this video out right here. It's not one you're going to want to miss.